Hi guys, today we will discuss Euro US dollar pair on the daily chart and I will show you how candlestick works on Forex. Now the thing to note is always remember engulfing bull candle on a low is considered exceptionally good. Now if I just zoom out, I will show you that since 2014 Euro US dollar pair is at the lowest. Now, if you will just zoom into all the lows, example, right here, it made a bullish engulfing green candle and it rallied. Again, right here, it made it and it rallied. Again, it rallied. Right here, it rallied. Now, if you will look at further on this falls, from like far away from zoom out, you will consider them also as buys. But if you look at it like in zoom in, you won't find engulfing candle in it. The theme. See, that's why you won't jump in. Right here you will find it and you see a rally as well. Right here you're finding it. So let's see how it goes. Right here. And it falls. Now it's just 3 black crows. But it's within the realm of this green candle. They are within the body of this green candle. So it doesn't make the same impression as 3 black crows. But if you will find a green candle after that, that will be bullish 3 method formation. And whenever bullish 3 method formation comes in, a huge rise comes after that. And you can find a green candle eating this red candle. Now, although in a bullish 3 method formation, it should be a big green candle eating all these 3. It's not. But it's like still saying that although I'm not that same pattern, but I'm showing some promise. I'm showing that these 3 black candles or red candles were not that sharply down. They were within the body of this green candle, and this green candle has eaten the last red candle. So it shows promise. Boom. Goes up. It goes up, up, up. Now, right here, these two candles, they might confuse you because this is a dark cloud cover. Now, a dark cloud cover, as I told you initially, is a bearish pattern. But, as I always tell you, wait for confirmation. The next day, it made a small, upper shadow candle, long upper shadow candle, but a small body candle. Now, that's not a good candle. It's neither bullish, neither bearish. It doesn't give anything. And the dark cloud cover, if we presume it was bearish, then the next day it should have fallen. And the body of the next day candle should have been larger to be eating this open and going below it. But it didn't. It did made a low lower. See, the low is, wait a minute, yeah, 1.0725. But it came back up and closed flat. Now this candle proves that it's not going down. Yes, there are dangers. Forces, the bearish forces are at the gate, but still it's not going down. So remember, it's not that dark cloud cover means it's going down. It means there is a danger, but it doesn't mean that it is going down. Therefore, wait. Now if you look at it, it makes fewer red candles, but eventually it goes up, which helps you understand what really is happening. Now this is a dark cloud cover. You will be afraid just as you were here, but you will wait for the second day, and once it did, you will get out. Now if you remember, we bought right here. And we will be exiting this forex pair right here. So it's a profitable trade. And you will wait. Now this 3 black candle means 3 black crows. So it's not that bullish. But you will wait. Wait. Now right here, it might look you like piercing line. This is going up. Or like doji candle, a morning star pattern. But it isn't bullish. Reason? The next day should have gone higher. But it didn't. It did make a long legged shadow candle, the doji candle, but it's not that bullish. Reason? Because it should be crossing up, not going down. It should not be honoring this open. If it is honoring this open, then there is serious issues. Because in a rise or in a fall, it should be like going for the kill, not waiting. Now, what's the basic reason? Now, the reason is if you're trading, and let's presume you have bought something and in heavy quantity, will you want the price to stay there? No, you'll want the price to go up. Reason? Because if it will stay there, there is a risk that it will go lower. But if it will go higher, then you have a margin of security. And that security helps you at ease. Therefore, in trading, when money is involved, it won't stick at the same price. Now, if someone bought it right here, then this candle is not his friend. Why on earth he will want it with a long shadow? No. Let's look at it further. It goes down. Now, this is 3 white candles, but the point is it is eating this candle, but it's with a gap. That's not a good thing. Now, although initially I told you could buy, and that's not a bad trade, but I will suggest you to wait. Now, this is a dark cloud cover, but wait for the next candle. Wait. It makes a small doji candle and moves up. Wait. And moves up. Now, right here, you could buy it. Right here, we'll place the icon. It falls, makes a big shadow candle. That's not good. But the next day, it makes a long-legged candle. And it opens higher. Now, the game or the theory, the most important of all, is what is happening with highs. Always remember, let me zoom out further. Always remember, if it breaks further highs, you are sitting in the right stock, right forex pair, any financial instrument that you're sitting, if it is breaking highs, that's good. But if it is doing right this, example, this is the first high, second high, not a good sight. First high, second high, third high, fourth high, all highs are pointing lower. Not a good mark. Then comes lows. This is the first low, lower low, higher low. Now lows are getting higher, so it's pointing good. But once it broke those lows, that's not a good side to be on. Now again, first low, second low, third low, fourth low, fifth low, all pointing higher. Good. But once it broke it, not a good side. Then it started to break them anyway. Now again, lows are getting higher. Good. But highs should be also getting higher. Otherwise there will be a problem. Example right here. The lows were getting higher, but the highs were getting lower. Not a good side. So always check this out. Now, if you look at it, it has opened higher. It continues to go up. And now it's trading straight. If you look at it, they all are pointing straight. Don't worry. Wait. Now that's a bearish engulfing candle. Now as per my trading plan, I will tell you to exit. Now you as a beginner should exit, but eventually you will learn when to exit and when to wait. See? Now you might ask, how on earth I knew that the next day it will go up? The reason? The box. If it is in a box, it will make all sorts of irrelevant signals. Reason? Because in a box, someone is buying at the low and someone is selling at the high. And they want to confuse the people so that someone is buying and someone is selling, and therefore those two forces have like equal opportunity. They don't want everyone to get bearish and they don't want everyone to get bullish. Now once it goes up, that means buy again. Let us get the icon of buy right here and then look further. Now as it has gone above the box, that's a good move. Now it makes an engulfing bearish candle. But remember the morning star patterns, the different morning star patterns. Now this pattern falls into that category. It goes lower. Now the thing to watch is this open is broken right here. That's a sell. And you will sell it on this day. Boom, it goes up. Buy again. Now the thing to note is the longer the level, the easier the trading. Candlestick is used to make exceptional return on the monthly level, as it is most trustworthy on that level. On the lower level, you will have like buy sell, more buy sell, but it is like a stronger signal. You can see it rose from 1.09 till 1.1183. That's not bad. That's brilliant. It rose exceptionally. That's what makes it the best like trading plan, because it gives you confirmed signals. And the best part is it gets in and out extremely fast. If you just look at it, we bought right here. We made a mistake. And on this day, we were out. Simple. Last 15 minutes trading every day, just look at your candle. That's it. You don't need to do any rocket science stuff. It's simple. It's something that is so easy that even a 6-year-old kid can like trade. You just need to follow the plan. The plan is candlestick. Simple 50 patterns that you will learn, and that's it. Now it has gone lower. Wait. Now it makes a like good body candle eating this candle. Therefore, you can buy. But remember, as we discussed in the previous chapter, 3 highs. This is the first high. This could be the second high. And now it's going for the third kill. Boom, it has crossed. So you were right. And let's see. Now it's again getting stuck. Get out. Now you're in a profit. So this trade doesn't really like concerns you. Falls. It makes small 3 candles not good thing and goes down. Now this is an interesting pattern. What do you see in these 5 candles? Bearish 3 method formation. It tells you there is a risk. But in this bearish 3 method formation, the first candle is not exceptionally bad candle, which makes it like what I call a trap. Usually it's formed to like make you believe that you are on the right track, but you're not. Now, if you look at it, we will be buying again right here. Now, as I call you, this is a trap. Just look at it, what happened. It went higher. So, the people who had shorted it got confused. Then it suddenly went lower. They got relieved. They thought, okay, it's not that bad. And now it's again pointing up. So, they won't believe it. Like this pointing up, the short sellers won't believe in it. And it jumps up. Short sellers get trapped and it goes to the higher level. Now if you remember, 1, 2, 3, this is the fifth high, which makes it a higher run. Boom, boom, boom. Now it falls off. You should be getting out. Now, right here you got out. Now this is the morning star pattern, which makes it a bearish pattern because it's on the high. It goes lower and then it jumps up. Now, if you remember my previous chapter, second high. This is the second high. If you will buy here, you might get trapped. So wait. It goes higher, goes lower, lower, and higher. Now this is the third high. Remember. Now if you want to buy, you can buy because usually, as I told you, on the fourth high it goes up, but this is the third high. So wait for it. But it did went up. See? So the concept is you could have bought here, but it would have made you problematic. So it's up to you. Either buy it here or buy it here. But do buy. Do follow the plan. It goes higher, higher, and higher. Now, let me show you one more thing. Let's zoom out. We bought it here at 1.06. This is here at 1.1677. That's what? Sorry. That's 1000 pips. That's huge. You can see you were always making money. Best part, you had a plan. You knew when it was going down and you knew when it was going down. You knew when it was going up and how good it went up. That's the best thing. Now, no other course teaches you this. Just check them out. They won't teach you the trading style. They will teach you how these patterns are. But that doesn't make it count. The biggest thing is to understand how the trade goes. Just look at it further. We are buying. It goes higher, higher. Now that's a bad thing. Get out. Right here, you will be getting out. But the rule of thumb is you're trading perfectly right. Now it goes lower and makes 3 candles, but don't believe in it. Now this is not making a good sign. First high, second high is lower, not a good sign. If it breaks this low on the closing basis, it will be exceptionally bad. Now it's going straight. Now straight is not that bad, but remember, the point is to make exceptional trades, the ones that we did right here. Now we have bought it again, but again it's like confusing us. Boom, it goes up and it goes up on the closing basis. Just look at this close. This is 1.1926 and this close is 1.1870. So it's higher. This means it could go even further higher. It makes a doji star and then it drops. So that's your cue for getting out. And again a profitable trade. So the point is this method makes money. And it's easy. It's not some rocket science. You can just look at it. On the daily chart, we have started trading from March 3 till August 25. That's what? 5 months? March, April, May, June, July, August. Yeah, 6 months. And what it was? 1 trade, 2 trade, 3, 4, 5, 6, 7, 8 trades. 6 months, 8 trade, and all exceptional. The reason? We are following a plan. Even if you were in losses, then even those losses won't count. Why? Because once the market changes, you'll be making money. And that's exceptionally easy. Just look at it. What have you done? Nothing. You just followed the plan. You just checked them out. You just followed the patterns. That is it. That is it. You saw it going down, you went out. What happens next? Just look at it. Now again it's going on the closing higher. so it will move higher. And that's the point. You aren't doing anything like extraordinary. You're just sitting and watching. And the best part is, whenever it goes down, you're out. You are out. So you have like reduced risk. Now, why do traders lose money? Because in a fall, they stick to their stock. But through Candlestick, you don't need to stick in it. It will tell you to get out and tell you to get in. Therefore, you're always in the stock when it's rising and always out of the stock when it's falling. The best part. Thank you.